Bali in 2026 is no longer an emerging playground. It's becoming a structured real estate market. And when a market matures, strategies that used to work stop being optimal. In this video, we'll look at what has changed in Bali, why certain investment models are losing efficiency, and why new construction is becoming one of the most rational approaches today. Despite global uncertainty, capital continues to move towards Asia, and Bali remains one of the most attractive destinations in the region. The island is small, land is limited, demands keep growing, not only from tourists, but from families, entrepreneurs, and long-term residents. Bali is no longer just a destination, it's a place where people choose to live, and that changed the real estate dynamic. Over the past few years, many things changed at the same time. Land prices increased, especially as development moved to the west, and regulation became stricter. Some areas reached saturation with traffic and density issues. So at the same time, short-term rental revenues became less predictable. Seasonality increased and competition intensified. And this is usually what happens when a market professionalizes. So opportunity strategies lose efficiency. So structured strategies take over. In a maturing market, investors look for clarity. New construction answers that need. A new product means clear specification, controlled cost, and no hidden structural risks. It also allows projects to be developed in emerging zones where pricing is still rational and long-term upside remains strong. The objective is no more to chase hype. It's to build an asset designed for performance and durability. Today, the most resilient projects follow a clear logic. Mid-sized residential development, 5 to 10 villas built as serviced residences. These projects are designed for monthly rentals, not for speculative short-term strategies. Monthly rentals offer stability, predictable cash flow, and strong demand from families and long-term tenants. And this is where Bali's demand is structurally growing. Now, let's talk about real estate expectations. On properly structured projects, net rental returns typically between 10 to 15%. Taxes included, not theoretical numbers, not best case scenarios, because acquisition is made below market value. There can also be an upside at delivery. Resale is possible when pricing is right, and sometimes within a few months. But the core strategy remains the long-term income stability. No investment is risk-free. What matters is how the risk is managed. Serious projects rely on clear investment contract, proper legal framework, and full due diligence before execution. Feel free to check my other video on freehold and leasehold. The reporting is structured. The alignment of the interests is clear, and this is what investors expect in 2026. Bali is entering a new phase. Less speculation, more structure, more long-term thinking. New construction, when done properly, fit this evolution better than most legacy strategies. If you want to understand how these projects are structured and whether this approach fits your investment objectives, feel free to send me a private message. Clarity always comes before commitment.